The world is watching the US-China trade war. The US has imposed 145% tariff on Chinese goods, while China has imposed 125% tariff on US goods. This is just baseline. There are additional tariffs on steel and aluminium in case of the US and agricultural products in case of China. So trade between the world's largest economies, the two world's largest economies, is now on life support. It is bad for both the economies, but China vows to fight till the end. So how China can fight back, and what US can do, and what are the positives and negatives for India in this fight? Let's look at the whole picture. First, let's look at US-China trade war and how China might hurt the US in this fight. Experts are warning that Chinese President Xi Jinping could retaliate with moves like cutting rare earth exports and dumping US treasuries that could cripple the US defense system, spike borrowing costs, and trigger a global financial shock. How? Well, let's look at the numbers. A total ban on rare earth mineral exports that is already starting, because China has suspended exports of wide range of critical minerals and magnets essential for assembling everything from cars and drones to robots and missiles. This means a potential disruption in industries like defense, electronics, automobile, aerospace, semiconductors, and consumer goods. The White House says that it is concerning and the US is thinking about options now. Next, US debt. It is China's nuclear option. China is the second largest holder of US debt at $760 billion after Japan, which holds $1 trillion. But why? Because countries like China buy US debt because US dollar is considered a standard currency in international trade and is a low-risk investment. Experts warn that China could weaponize the US Treasury holdings by dumping it, meaning a sell-off for less than the worth. What happens next is that it would devalue the dollar because of the amount of debt it holds. Now, it is not clear if China will go down this route because it would hurt China too. If dollar assets are devalued, it would strengthen yuan, and that is not what China wants, and the Chinese exports will become more expensive. Now, how will the US respond to this? Well, if China would make such a move, US Fed could quickly counteract the damage with aggressive quantitative easing. With this, the central bank will inject money into the economy by buying key financial assets like government bonds in order to lower the interest rates and stimulate economic activity. But with the daily back-to-back and back and forth of tariff cuts and announcements, the decision making is in flux. Morgan Stanley forecasted that Fed would not make any cuts for the rest of the year. Now, the impact, as we are discussing the impact in other videos, it could be negative for both the countries in this case. The US consumer and the manufacturers are reliant on Chinese goods because they are cheaper and help cost cutting. For instance, an iPhone manufactured in the US would be a lot more expensive than one in China because of the cost of labor, the raw materials, etc. being cheaper in China. And finding an alternative as soon as possible is not very easy. But Trump administration argues that China is far more vulnerable as its economy relies on US consumer. If the US closes its door, China will have no one to sell to and the economy will collapse, is what it is saying. But this might not be all true because less than 15% of China's exports go directly to the US, down from 19% in 2018. China has also cultivated alternate resources for what it imports from the US. So China has options because now China's largest trading partner is Southeast Asia. However, economists do expect tariffs to impact Chinese economy economy, with Citi and Goldman Sachs both cutting their 2025 GDP forecast for China. Both sides say that they're open for talks, but nobody is really talking. So looks like the solution is not very near for a deal between the two largest economies. Meanwhile, India looks at this as an opportunity, only if it grabs it. Last time when US hiked tariffs on China, India was seen as the next best alternative for manufacturing, but Vietnam, Indonesia and other Asian countries grabbed the opportunity faster than India could. There were issues like high tariffs, regulatory issues, etc. for manufacturers to set up base in the country. It's years since then and the opportunity is back only if India opens its doors for it, and looks like New Delhi has already recognized this opportunity. Apple has already started manufacturing more iPhones in India. General Electric, Ford, Cummins and more US companies have already set up plants in India. But for India, there is also a concern of Chinese dumping. As per reports, industries have asked Center to impose anti-dumping duties on China because a trade war with US and China has led to a surge in imports from China into India, because reports say that China is now offering discounts on electronics and other products to Indian traders. More discounts can come in from China, which means flooding of cheap Chinese goods into the Indian market that can distort the market prices in India, affecting local manufacturers. But India is considering to impose anti-dumping duties on such products to safeguard local industries. So that's what it looks like. How do you think this will pan out in the future? Let us know in the comments. For more such news and views, keep watching ET Now.
If you like this video, then like, share and subscribe to ET Now.